Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly index review for February 9th, 2024. Starting off with the S&P 500, we can see on the chart the S&P 500 was up a little over 1% for the week. We are now well into a major rally in the stock market coming out of the October 2023 lows. And one thing I wanted to talk about in this video actually is the extension from the 30-week moving average that the S&P 500 is now exhibiting. And you can see on the chart here, this is the most extended the S&P 500 has been from the 30-week moving average in 2 years. Obviously, we had the 2022 bear market. Then we had a couple major rallies in 2023, but now in 2024, coming out of this rally out of the October 2023 lows, the market is now almost 10% above the 30-week exponential moving average. And we'll get back to this in a second. We'll look at the daily chart first, but historically, there's a couple recent examples of 10% corrections that brought the S&P 500 back down to the 30-week moving average after it was about this extended from the 30-week moving average during a major rally. So, a 10% correction from here would bring the S&P 500 all the way back to around the 4,600, 4,500 level and would be a pretty sizable correction. So moving over to the daily chart real quick. This week, we had a strong rally to end the week. The last 3 days of the week is where the S&P 500 continued higher. Earlier in the week, we had a little bit of a pullback coming out of the strong end of week last week. So the S&P 500 continued to push higher this week. And there was really powerful stage 2 breakouts in multiple sectors, which is really what drove the market higher this week. There was also a rotation into small caps. We'll talk about that shortly, but that could actually drive this market higher over the short term, given the fact that there was, some big movements across individual stocks this week. Now, getting back to that extension from the 30-week moving average, the S&P 500, you can see on this blue line, this goes back 20 years, and this is basically the percentage the S&P 500 is above the 30-week moving average during this time period. And you can see that at the 10% level, the S&P 500 typically doesn't get much more extended than this before it, either goes into a correction or doesn't, the slope of the uptrend starts to, diminish, basically because it's kind of an unsustainable slope higher. So if you look at the end of 2017 heading into 2018, there was actually a 10% correction here. And coming out of the fall 2020 market that was extended, there was 10% corrections before the market resumed higher at the end of 2020 and heading into 2021. During 2021, the market was actually extended again quite a bit, and that led to the major top that headed into the bear market in 2022. You can see a kind of a notable divergence here where the S&P 500 is starting to weaken against its longer-term moving average. So looking at those corrections in 2017, you can see here, the S&P 500 was about 10% above the 30-week moving average. After an extended run, market has a major pullback. You can see like this blow off move here, 4 weeks of a strong rally, and then all of a sudden 2-week major correction hits. So that's how quickly things can change, going from an extended market into a correction. If you go back and look at 2020, S&P 500 is about 10% over 10% above the 30-week moving average heading into August after another, major move higher. And then you get two 10% corrections in September and in October before the S&P 500 resumes higher that year. So again, historically, we're starting to get to stretch levels in the S&P 500. We've had a monster rally. If you think about, fuel in the car, we're basically probably getting close to empty, running on fumes. We could see a couple more weeks of this rally pushing higher, but, that's just going to be even more of a dangerous position, more extension from the moving average, which could lead to a massive correction. And this correction is coming at some point. It's not going to stay away forever. So that will initiate the next great buying opportunity. Looking at the NASDAQ 100, technology did outperform again this week. Again, artificial intelligence reignited. Semiconductors had a strong week, and cryptocurrency stocks rallied strongly as well. So multiple sector moves kind of reignited this week. NASDAQ 100 outperforms the S&P 500. NASDAQ Composite actually was one of the best performers, and this has more small cap stocks. So really there was a rotation into small caps this week, which helped power this market higher. You can see the small cap Russell 2000 closed at the high end of the range this week, and the volume was above average. So this is really what the market needed to keep this rally going. If this continues for the next couple of weeks, we might see kind of a euphoric top in this market, and there could be some very profitable moves, but ultimately that's going to lead to a major correction. Finally, the Dow was about flat on the week, was actually going to be down in the week until the close at the end of the week. And then you've got the relative strength here is actually starting to, underperform the S&P 500. The Dow doesn't have technology stocks, and technology stocks have really, been the major driver of this rally. So that's why you're seeing underperformance there. Percentage of stocks above the 50-day moving average did bounce off the lows of the week in the S&P 500, but you're still seeing a massive divergence here. And ultimately, this probably will initiate the next correction. However, there was that rotation into small caps. If you look at the percentage of stocks in the NASDAQ above the 50-day moving average, it did move higher this week, and there was rotation into small cap stocks. So that's, again, what's driving the market higher all of a sudden, which could see some more speculative activity in the short term. Finally, the VIX did break below the 10-week moving average this week. So the kind of hints that maybe a correction was going to get going was rejected this week. However, as I noted in the newsletter, if you look at the sector review, there's two key warning signs with the financials and with the bond market. So, again, there's upcoming drivers of a correction too. They just really need to kick into gear and could be really major problems. So overall, the market did accelerate higher again this week. Again, we're getting towards the end of a rally, so you want to start to prepare for the next correction. Get in the mindset of being patient and waiting that out, because that will create the next great buying opportunity. But it will require some patience, probably over multiple weeks, for that to play out. So pretty exciting market over the short term, potentially. Longer term, we need to wait for the next correction for the next great buying opportunity.